Thank you very much. Good morning, Chairman Comer. Good morning, Ranking Member Raskin and members of the committee. My name is Michael Frerichs, and I am the Illinois State Treasurer. I am the state's Chief Investment and Banking Officer, and in that role, my office manages approximately $52 billion. The portfolio includes about $26 billion in state funds, around $17 billion in college savings and retirement funds, and about $9 billion on behalf of local and state governments. I also serve as a trustee of the Illinois State Board of Investment, which manages approximately $28 billion in pension assets on behalf of about 230,000 beneficiaries. It is my job to protect and grow the hard-earned savings of families across the state, as well as funds that state and local units of government depend upon. I take this responsibility very seriously. Whether it's the single mom trying to save for her kids' college tuition, or the town financing new schools, I know they are trusting the Treasurer's Office to grow returns on those funds over the long term and ensure that they have the money they need in the meantime. I am tasked with investing not just for the next quarter, but with the goal of maximizing returns over the next quarter century. This is what brought me here today. We are witnessing a widespread, highly coordinated, politically motivated attack on investors and the hardworking people they serve. This pushback is anti-free market and anti-investor. It is misleading and it is harmful. It harms retirement savers, pensioners, working people, businesses, and it harms America. This coordinated campaign is focused on ESG investing. Most people don't know what ESG is. ESG is data. ESG is simply additional information that investment professionals use to assess risk and return prospects. It is about value, not about values. In order to maximize returns, an investor must be able to manage and mitigate risk. The more data we as investors have, the better informed our decisions are when selecting investments over the long term. ESG is about looking at a wider range of risks and value opportunities that can have a material financial impact on investment performance. For example, if you're investing in a pharmaceutical company, it's thinking about whether that company has exposure to massive lawsuits because of its role in the opioid epidemic. Our approach is to integrate material ESG factors into investment decisions along with many other considerations. We are not ignoring traditional financial factors like profitability and creditworthiness. We are integrating more data into our decisions to give us a better idea of risk and growth prospects. This approach is backed by academic research, but it's also common sense. Companies that value their workers have less turnover and higher productivity. Companies that build a strong corporate governance structure will be more resilient and valuable over the long term. While I welcome healthy debate about best practices and fiduciary duty, I do not welcome the deployment of blacklists and overreaching legislation that would strip professionals of their freedom to invest responsibly. I do not welcome decrees that ignore the research, fundamentally misunderstand the role of fiduciaries, and impose real costs on taxpayers, pensioners, and hardworking families. When it comes to material data, it's irresponsible to tell investment professionals to ignore information that they can use to do their jobs better. Frankly, I'm deeply concerned by the highly orchestrated attacks on the investment profession and the focus on restricting investors' freedom to exercise their professional discretion and fiduciary duty. To ask investment professionals to ignore material risks and investment opportunities is asking us to stop doing our jobs. For example, should we ignore when healthcare companies understaff their operations and jeopardize the safety of patients? Would you expect a company that does this to continue to increase in shareholder value? It would be irresponsible to ignore these issues like these, and it would be foolish to hinder professionals' abilities and their freedom to invest responsibly. This AstroTurf opposition to decades of work by investment professionals is a dangerous intrusion in our free market system. If unchecked, this war on investors will stifle economic growth, cost taxpayers and pensioners billions of dollars, as many studies have already found, and it will obstruct investors' ability to protect and grow people's hard-earned savings. In closing, now is not the time to stop investors from considering prudent data that can lead to better returns over the long term. The American economy depends on investors. Please let us do our jobs. Thank you for your time and attention.
Thanks for watching, and if you haven't already, please consider subscribing to our channel. And while you're at it, please leave us a comment. Thank you for watching.